BlackRock said to be planning to dismiss about 600 employees, about a third of its global workforce. The latest retrenchment that we've seen from some of the big banks and financial institutions on Wall Street. Bloomberg Wall Street reporter Sonali Basak on set with us right now to walk us through this. I guess given some of the announcements we've heard from some of the other big banks on Wall Street, this isn't a total surprise. 3%, a relatively small number here, but is this maybe a harbinger of more to come?
Yeah, it certainly should be seen as that, because we have one of the biggest asset managers in the world, expected, by the way, in just this quarter alone, this previous quarter, to have brought in another $600 million in assets, given the market's rise, so their assets rising, if you will, but repositioning now, knowing that the asset management positioning is changing. And you see that from the memo to staff from Rob Capito and Larry Fink, that is BlackRock's president and CEO, saying that new technologies are poised to transform our industry and every other industry. So you have BlackRock trying to capitalize on this ETF boom, right, while also trying to double down on private assets and recognizing that there's a fundamental change.
Do you need more people for that, though?
So they say that the headcount will probably be larger at the end of this year. So you're cutting about 600 jobs here in the current workforce. Remember, BlackRock last year had in January about 2.5% of their staff dismissed, and then another 1% of cuts in June. So it wasn't the only set of cuts that they had made. Now remember, BlackRock's assets, even if you expect them to come in for the end of last year at $9.7 trillion, is less than they had at their 2021 peak, given what we've seen in the changes in the market. A lot of this is market appreciation, right? But they are below where they had been before, and you have seen that reflected in the stock price of BlackRock in more recent moments.
Yeah, and of course, those asset levels, to your point, a lot of that has to do with the market. We're seeing that among other money managers as well. And with that in mind, situate this in the broader context. I mean, Romain mentioned that at the banks you've seen layoffs. You also have seen layoffs at other money managers as well recently.
Yeah, and one question to ask. The industry is consolidating. You have a lot of these asset managers that are looking around, knowing that scale is going to be important to them, and they're doing so by buying other assets that will help them push into different areas. One question mark when it comes to BlackRock is, yes, they've been a behemoth in passive investing, but what will they do about that private asset business that they have? They want to double their revenue over the next 5 years. What kind of talent do you need for that? That tends to be very expensive talent. On the other hand, how much are they going to be investing in technology and new product areas? Katie, you've covered this religiously. Their movement into the Bitcoin ETF world, for example. And purely, when they think about the dollars that they're spending to maintain profitability in this new era of asset management, how much of that investment goes to more people, more bodies, versus more technology to make them competitive? And how much of it goes around the world to different growth regions where they could see more flows?